the last few days, we have seen Brent crude price, in fact, going beyond $100 a barrel, all because of what is happening between Russia and Ukraine. What does it really mean for a country like India, which relies heavily on import of crude from around the world? To understand that, we are joined by two very special guests this evening. We have Vandana Hari, founder and CEO, Vanda Insights, a well-known expert on global energy markets. We also have with us Maria Pastukova, who is Senior Policy Advisor for E3G Berlin and energy diplomacy expert. She leads E3G's work on energy diplomacy, international energy, finance and geopolitics of the energy systems transition. Thank you very much, both of you, for joining us here on Mirror Now today. Vandana, I want to begin the discussion with you. What kind of an impact are you expecting on crude of this Russian invasion of Ukraine?
Good evening, Heena, and thank you for having me on your show. We may not have seen the worst in terms of crude spike. You mentioned Brent crossing $100 a barrel a few days ago. And it is still a fear premium in crude. It's a fear of Russian energy supplies, oil and gas exports to Europe being disrupted, or worse still, being completely cut off. And that hasn't actually yet happened. So the physical markets are tight. Yes, they were quite tight even before this Ukraine crisis, but we haven't really seen the full impact of the worst case scenario that could still unfold. So could prices go even higher from where we are now? Absolutely.
Okay, so you're telling us that we have not really seen the full impact of the worst case scenario. Maria, what is your assessment?
Good evening, and thank you for inviting me. I'm delighted to be at this show. Regarding the developments of oil prices globally, we now see the Brent prices are not reaching the 2014 levels post-global financial crisis, around the time when the Crimea conflict has occurred. But for now, we see that oil prices have at least a little bit stabilized and went a bit down after it was clear that the EU and the US will not be targeting the energy sector by its financial and sectoral sanctions. As you probably have seen, the sanctions on SWIFT are excluding energy transactions and excluding banks that trade in energy, which means for now, and I agree with the other esteemed speaker, the oil prices are high, but we really don't know what will happen in the future. Ban on oil and gas exports from Russia would be, in all meanings of this word, a nuclear option for the EU and the US, given the high dependency of the European Union on oil and gas from Russia. But exactly because of this dependency, we don't see it happen anytime soon, unless, of course, the situation in Ukraine escalates even further than it already has.
Okay. Vandana, now, given the current circumstances and how the crude has behaved over the last few days, where do you see really crude heading? What kind of an outlook do you have for crude prices?
So what happened with the incursion in the early hours of Thursday morning last week was it caught almost entirely the whole world by surprise. It certainly caught the markets by surprise, though in the preceding days and weeks, the markets had been progressively factoring in a potentially worst case scenario, but obviously it wasn't fully factored in. And as I mentioned, I don't think it's yet fully factored in. The problem is that how do you quantify fear? And how do you define a worst case scenario? So as Maria quite rightly points out, the sanctions so far from the Western allies, including what we saw in terms of them barring Russian banks from the SWIFT system, is they're trying to carve out, they're trying to protect, ring-fence Russia's energy exports. But we can see in the physical markets already banks, traders, buyers, even shipping companies are retreating. They do not want to take the risk of having any sort of business with Russian oil and gas. There's another very real fear in the market right now that even if the West tries to keep Russia's oil and gas flows going, Putin might, as a retaliatory measure, curtail or completely cut off, and especially gas supplies. Europe is heavily dependent on pipeline gas from Russia. So, the next few hours, I would say, and perhaps days, depends how long this drags on, are going to be very critical. So as we speak right now, Monday evening in Asia, there are signs that Ukraine and Russia are planning to, or maybe planning to sit together, come back to the negotiating table. If things de-escalate, I think everybody around the world will be praying for that. We could see a quick sell-off in crude and prices falling back considerably from current levels. Of course, all the fear premium will not go until the situation is completely calmed down. But on the same plane, I think it's almost equally possible that things deteriorate much more before they start becoming better, in which case, 110, 15, 20, I wouldn't rule out any of these levels for crude.
110, 15, 20. Well, that's going to be very bad news for importers like India and Maria. Like we know how dependent Europe is for, for its gas and oil requirements on Russia. That kind of a dependency is not there for India. As far as crude imports are concerned, we, of course, rely heavily on Gulf nations from Russia. The dependence is very little, about 1% also. It's kind of negligible. So clearly supply disruption won't be there for India if this continues. But otherwise, what kind of an impact on India are you estimating?
I'd say, as Vandana already pointed out, the main impact on the global markets and on other exporters than Europe, other importers than Europe, would be the surge in prices and the continuing tightness of the oil market. What we see now is that the countries most dependent on Russian oil are in Europe, but also China, Korea, and Japan are growing its shares as importers of Russian oil. If it comes really to a ban of oil exports to Europe, then we see that some countries can actually diversify away from Russian oil, particularly those countries that are not dependent on pipeline supplies, such as those in the Eastern Europe or Germany. And Netherlands, for example, one of the largest recipients of Russian oil in Europe, would most likely diversify supplies to other countries, most likely from the Middle East, which would mean an even tighter market and more competition among European countries and India for Middle Eastern supplies, resulting basically in even higher prices. So I think this is maybe the main consequence that we might see from this very extreme, though I still think very unlikely situation of Russia cutting oil supplies to Europe.
Okay. Vandana, what does it really mean for a country like India, which relies heavily on import of oil, not so much from Russia?
Yeah, it's a really tough situation for India. And not just India, I would say the whole world is going to pay the price of this, what is unfolding in front of our eyes. Look, these are highly interconnected markets, gas and oil and pretty much all the major commodities the world consumes today. So how does India pay a price? Not, as you mentioned, it doesn't really import directly much of Russian oil or gas, but the moment prices in the international markets spike, which is what has been happening pretty much since the start of January, India's import costs zoom up. And, as you noted, 85% dependency on imports for India's crude needs. So India is hemorrhaging more and more foreign exchange. In recent days, we have seen the US dollar becoming stronger as well. The corollary to that is that the rupee is weaker. India spends much more rupees in buying the same amount of dollars, and in dollar terms, the value, the cost of the crude it is importing is going up. So, all in, it's a really bad news for an energy-dependent and import-dependent country, one that's fighting inflation, and that's basically true for the whole world. A really bad time for this to happen in terms of inflation, in terms of central banks actually trying to pare back quantitative easing. It couldn't have come at a worse time, this crisis.
Clearly, nobody was really expecting something like this at a time when countries across the world were slowly limping back to normalcy. The economic recovery had just started happening. Vandana, one more question before I go back to Maria, and that is about whether India is doing right by not passing on this hike in fuel prices to the customers, because we are being told that, the oil marketing companies are seeing a loss of about 7 to 8 rupees per litre on petrol and diesel. But because, as you know, the election season is underway, the hike is not being passed on. And what the fear is among people that soon after the elections are over, the hike will be passed on. And that's going to be huge for people, and it's going to impact monthly budgets as well. So do you think probably now that is not the right way forward given the current situation? Because we don't know what will happen in a few days from now.
So I would say two factors to bear in mind on this particular topic. First of all, fuel prices, not just in India, around the world, especially in middle income, emerging market economies, are a highly sensitive political issue, as much even in the US as in India. So the second thing is that it's always a very tough juggling act for governments. And, I have studied fuel subsidies and how governments have tackled them, not just in Asia, not just in South Asia, but even in Southeast Asia. And by and large, I would say over the past few years, India has done very well in actually getting rid of subsidies as a structural element of the oil markets. Now, having done that, obviously, it's now more difficult for the government, because on the one, you do have to worry about the inflationary pressures on the common man. And at the same time, you do have to worry about your budget, balancing your budget. So, removing some taxes when the prices get too high, in my view, that's probably not the worst thing to do, and, probably the right course of action.
I want to give you the last word, Vandana. We've just got a statement yesterday only from the government, day for yesterday actually, from the government on what it is planning to do as far as preparing itself for this kind of an uncertainty is concerned. So one of the options clearly was suggested that if need be, they won't really shy away from dipping into the strategic petroleum reserves. A couple of things that you will like to recommend to the government to protect the consumers, because eventually it's going to hit us all very, very hard if this continues like this the moment elections are over.
So maintaining a sufficient quantum of strategic petroleum reserves, I think, is quite important for a major importing country, for a country with the highest growth rate of oil consumption in the world. And India has been a late starter on this. We know that. I think releasing stockpiles now, and as you were mentioning earlier, India did so a little bit in collaboration with the US late last year, but that's really a drop in the ocean. And, given that India doesn't hold enough SPRs to sizably move markets or sentiment, it's really not a tool for India, ready for India to use right now. But what the country can do is jumpstart its buildup of SPR, I think. And Ukraine crisis to one side, for coming years, I think it's a given that we're going to see more volatility, more upside to oil prices. Investment in the sector has really crashed. So, geopolitical problems are going to persist, probably even get worse. So to deal with any kind of supply shocks, one of the clear fallbacks any country has is its SPR. So, the country needs to double down on building up its reserves. At least 90 days worth of imports in the SPR is what the OECD recommends, or rather the IEA recommends for the OECD countries. So, that's a good benchmark to go by.
But we only have 9.5 days worth of reserve capacity.
Yeah, exactly. So the country is not really in a position right now to use that as an effective tool to try and calm down domestic prices. So this is more for the future, start today. So in the coming years, as I said, there will be more such problems. Unfortunately, I can just see it. And, perhaps you will be better equipped to use your SPR. The other, and I think the government is already doing that, is to continue or perhaps accelerate efforts to diversify energy sources. So one is, of course, diversifying the sources of oil, but as the current problem has shown us, it doesn't matter how diversified your sources of crude or refined crude are, you will still pay whatever is the price in the international markets. But diversify energy sources, so the world is moving towards cleaner energy, and so is India. Perhaps, those efforts, now is the time to accelerate those efforts.
All right. Thank you very much, Vandana, as well as Maria, for joining us here on the special broadcast and helping us understand what this Russia-Ukraine war really mean for the energy sector across the country, and specifically for India. Thank you very much, both of you, for joining us.